Hey guys, Sarah Berry CPA, Texarkana, Texas here, and our family just returned from our summer vacation in Hawaii, but I still have vacation on the brain, so I had several clients ask me, well, are you going to get a tax deduction for your trip to Hawaii? The answer is no, because that was a family vacation with too many personal elements. We didn't have enough business involved there in order to get a tax deduction for it. But that brings up a very good subject that I wanted to send out in an email newsletter and do a short video as well. So there are ways to take a vacation and to get a tax deduction for that. So I'm going to pull up my notes here and go through this with you guys. I will also be sending out an email newsletter with more details in it. But basically, you can deduct a vacation if you structure it correctly and it has a business purpose. So what types of travel expenses are we talking about? There's two different types of travel expenses. Your transportation costs, which is like your airfare or your automobile, your rental car, fuel, and things like that. So the transportation expenses are 100% deductible if the majority of your days on your whole vacation, if you divide it up between business days and personal days, if the majority of your days are spent on business versus personal, then you can deduct 100% of your transportation cost. But if the majority of your days are personal vacation days and don't have a business element in there, then you cannot deduct your transportation costs. So that's the rule for that. The other type of travel expenses are what we call life expenses, and those would be your lodging and meals and things like that. And your lodging and meals are deductible on the days that are considered business days. They're not deductible on the days that are considered personal days, okay? So the basic rule for business travel is just like any other IRS expense, IRS allowable business deduction. So if you've been in business very long, you've probably heard the term, is the expense ordinary and necessary? So that's the rule that the IRS uses for any expense to determine if it's deductible. Is it ordinary and necessary? Now, I don't want the words ordinary and necessary to scare you away from taking a deduction that you are entitled to, because the courts have interpreted this rule very broadly. For example, an ordinary expense doesn't mean that every other person in this industry takes this as a deduction. So, and necessary doesn't necessarily mean that you have to take this deduction in order to keep your business running. It has been interpreted to mean appropriate and helpful. So don't let the terms ordinary and necessary scare you away. That's the overarching umbrella that tells you whether something is deductible or not, but it's much more broad than what it initially sounds. So let's get down to the real test of whether a travel expense is deductible or not. So there are what we have divided up into 5 different categories of whether something is deductible, whether a travel expense is deductible, it has a business purpose. First, does your trip have a profit motive? If it does not have a profit motive, then it's not going to fall into a business expense category. Now, for example, I take my firm on an annual fall CPE trip. And so that CPE trip in and of itself does not generate me a profit necessarily, but it is a business deductible expense because I am taking myself and all my staff, my team members, on a business trip. We're going to a convention to expand our knowledge and our skills, to also create more of a bond between us, more of a family atmosphere. It creates longevity in employment, and it's one of these selling points that helps us recruit top of the line skilled team members to our firm. It's very looked forward to, and we have criteria that determine whether the firm is able to take everyone on this trip. It's very much a business trip, even though that particular trip does not generate a profit. It contributes to the fact that our firm generates a profit. So does that make sense? So first, item in the 5 tests does it have a profit motive. Whether it generates a profit specifically right then or not, it has to have a profit motive. It has to contribute to the overall profit motive of the business. Do you stay overnight? If you don't stay overnight, you can't deduct the expenses. Apply the for only test. When you plan your trip, ask yourself whether a normal, rational business person would travel for only this business reason, or does it have such a personal element that really it's a personal trip. It has very little business scattered in there. So think about that. Does it have a primary purpose test? So for travel within the United States, you need to pass the primary purpose test, and you want to make for sure that the majority of your days are business days. So again, that's important. You need to, again, it comes back to making for sure this is truly a business trip. And the 5th thing is to maintain good records. So that's where I'll briefly go over some cases here, have more detail in the email newsletter that I send out. But you want to make for sure that it has a business purpose, and those business purposes are documented. Because those maintaining good records is very important to whether you're allowed this deduction or not. So 5 tests. Profit motive. Do you stay overnight? Apply the for only test. So would you travel if it was for only for business? Primary purpose test. That's the majority of your days are spent on business versus personal activities, and maintain good records. So there's your 5 things. So one thing, I'll bring up a court case. It is, let me pull up the exact name of it, the United Title Insurance Company. So that case is about board meetings in resort locations. So that's Charles Hinton, the owner of United Title Company. He planned this out-of-state board meeting, and he invited 11 of his 14 corporate board members and other business contacts, real estate attorneys, developers, real estate agents, and things like that. They had meetings. They developed and solidified these business relationships, and so it was allowed whenever it was questioned with the IRS. So he maintained good business records on that. Also, one of the things I mentioned in here in my newsletter is the justified travel with a convention or seminar. Again, that's what we do within our firm, is we take our entire office to a convention or seminar, and we expand our knowledge that is related to our business, as well as solidifying business relationships and the overall team morale. So one thing about these conventions and these seminars is most of the time they're in resort locations. They're beautiful. This year we're going to Glacier National Park. Last year we went to Colorado Springs. The year before that we went to Naples, Florida, and then Cancun. But I wouldn't necessarily have to take all of my employees in order to be able to deduct this trip. I could go to a CPE convention just myself at a resort location, as long as the majority of my day is spent there, that I can illustrate that they have a business purpose, then I could deduct expenses just for myself. Now, taking along with spouses or non-business individuals, friends and things like that, their expenses would not be deductible. Only my expenses are deductible. So my expenses are deductible. When I take my employees, their expenses are deductible, but their spouses' expenses are not, because bringing the spouses along doesn't necessarily have a business purpose. So keep that in mind. Okay, so I have a few cases listed here in the email newsletter I'm sending out of some cases that they lost their travel deductions. One of them was a custom plywood manufacturer that went on a 4-day trip to the Super Bowl in New Orleans, and he provided hotels and a Mississippi River cruise. But the IRS disallowed it because there was not enough documentation of business purpose. There was too much personal, and there was just scattered business discussions in this trip. So it wasn't enough to justify the business purpose of it. So the IRS disallowed that. And then I've got another case listed here. A minister escorted a team, a tour group to Europe. It was probably a trip to Israel, if I had to guess. Haven't read too detailed into this case. But there he failed the profit motive test. So he did not have a profit motive for that trip, so it was disallowed. And then my third example of losing the argument with the IRS on travel deductions, this guy took 5 separate trips, but he did not have the adequate records. So he lost those deductions because he couldn't prove that he had a business deduction, a deductible business trip and a business purpose for those. So records are very important. But I wanted to drop this to you guys. Again, remember the 5 tests. 1, profit motive. You have to prove you have a profit motive. 2, you have to stay overnight. 3, apply the for only test. So would a reasonable business person take this trip if it was only for only business purposes? So take out the personal attributes out of this trip, and would someone take that trip? So you have to apply that. That's 3. 4, primary purpose. So if you're travel within the United States, there's a majority of your days spent on business. So you want to do that in order to deduct your transportation expenses. And then 5, maintain good records. So I hope you guys, this has been informative for you all, and I hope you start planning your next vacation, and I hope you have enough business built in that you can deduct these vacation expenses. So let us know if you have any questions. Thanks so much. Bye-bye.